The auto sector is in focus because of the kind of sales numbers that we have seen. Prayesh Jain of India Infoline is with us. Prayesh, hi, good morning. First, a word on Maruti's sales numbers, because really that's been the stock in focus all through last week. Your reading of that?
See, the numbers were, kind of in line with expectations on the domestic front. The worry is more on exports now. They've fallen from a run rate of somewhere around 11,000, 12,000, what they used to do last year, to now around 4,500 to 5,500, that kind of range. That is something worrying us. On the domestic side, I think so. The mini segment has been doing pretty well on a sequential basis. Sequential basis volumes for most of these companies will be better because of the December effect, whereby the discounts are higher for the closing models of 2013. So sequentially the volumes were good. For the rest of the year, I think so the volumes will continue to fall in the region of 5 to 6% kind of levels, and even for the first half we expect a similar trend. It's only in the second half of 2015 or FY15 where we expect a recovery.
Oh, so you have a sell on Maruti? What's the call?
See, Maruti, we have a buy rating. Now we'll start factoring in FY16, whereby we're expecting a much stronger recovery by then, and even for that matter, the margins for Maruti are expected to improve from the current levels. So in that terms, I think the earnings trajectory is likely to be on an upward trend. FY15 might not be a very strong growth, but FY16 could be a relatively stronger growth, and we have a 120 rupees EPS estimate for FY16. So on that terms, I think so the valuations are pretty fair, and we can have a upside. We have a target price of around 1870 on that stock.
Okay, Bajaj Auto numbers came in today, 3.18 lakh units versus 2.97 in December. Well, January is always better than December, but what have you made of the numbers?
See, the numbers are actually good, because Bajaj Auto over the past few months have been reporting weak set of numbers, especially its Discovery, its Discover brand, and the company had guided in the call in the recent Q3 FY14 conference call that the volumes could recover from the Discover pack, and that seems to be reflecting in this month's number. So that's a decent set of numbers that Bajaj Auto has reported.
Prayesh, what about TVS Motor? Because that's had a big rally now. Numbers, of course, looked quite okay, but at this price, would the stock be a buy?
The main valuation re-rating for TVS Motors has happened for the volume trajectory. It's been reporting good set of volumes for past few months now, especially being a strong presence in the scooter segment. But now for further upsides from current levels for TVS Motors, I think so they have to work on the margin front. They have been reporting a 6% kind of levels for the past many quarters, in spite of showing decent recovery in volumes. That is something the company has to work on, and even a 1% improvement of margins can substantially add to their bottom line, and that can narrow down the valuation gap between the market leaders with the likes of Bajaj Auto and Hero MotoCorp and TVS Motors. So that is something that has to be looked forward for, and but we currently have a market performer rating on that stock.
Okay, M&M again, the numbers were this way and that. Tractors is the one that's provided them some kind of good news in terms of sales. What do you do with that stock?
See, we have a buy rating on M&M as well, and we have a target price of around 1041.
Despite PV sales being 25% lower, that doesn't deter you at all?
See, definitely, the UV volumes have been falling for M&M, but the thing is, Lata, the tractor segment with a 20% kind of volume growth and a EBIT margin of 15%, and the UV segment with a 25% fall and EBIT margins of 9%. So earnings growth is likely to continue for M&M even if this continues. Because the margin impact of tractors can actually help it show better numbers even in FY15. So, and its subsidiaries are doing well. The two-wheeler performance is improving, and the CV business, although it continues to be weak. So we have a buy rating, and the rural story for M&M is strong. So we would continue to have a buy rating on that.
Finally, what's your call on Hero MotoCorp sales numbers, Prayesh? Still expecting that, but what's your expectation, and how would you trade that stock?
In the conference call, the company had cited that for the month of January they have seen second half run rate of around 20,000 and first half run rate of 15,000 per day. It works out to somewhere around like 5,25,000, which is flattish on a month-on-month basis. So Hero MotoCorp numbers may not be too exciting in this month, but down the road I think so. Hero MotoCorp should start reporting good set of numbers, especially from the export front in the next year, and with the kind of margin improvement the company has been talking about. Even if they deliver around 50 to 80% of the margin improvement that they have been talking, I think so there is strong earnings growth that can be expected of Hero MotoCorp, and hence we have a buy rating with a target price of 2,350.
Okay, Prayesh, I'm just moving away from the topic, and you can refuse to answer this. In the past, you used to track Aban Offshore. Have you noticed the stock price move over the last 2 weeks or so, and have you tracked the stock over the last 2 or 3 months, and what's going on over there?
Currently I don't track that stock, but one point of contention that I can think for Aban Offshore is that the Brazil discoveries that are that was the talk some 2-3 years back when the jackup rigs rates had increased substantially. That story I think so could actually evolve when the Brazil blocks or the Mozambique blocks, which are the deep water blocks, start developing, and that could happen over the next 2 or 3 years. That is just one angle what one can think of on a fundamental side, but rest I don't track the stocks too closely now to comment on any future thing for Aban.
Okay, well, just one quick word if you can on Tata Motors. I know the domestic numbers are a little marginal to that stock, but the global news is also getting bad.
Tata Motors, but at this price, I think so. It's a decent buy at 350, and we have a target price of 400. JLR volumes, I think so, will continue to do well even in the medium term, because the kind of launches it has lined up, okay, especially the Mini Jaguar and even the Land Rover portfolio. They have a few interesting lineups down the road. So new models always pep up the volumes for any company, and I think the kind of geography mix it has been witnessing, with emerging markets contributing higher, where the margins are better. The margin trajectory might also remain in the range of 15 to 16%. So in that terms, I think so a strong earnings growth from JLR is expected to continue. And prior we had a market performer, but now with a good decent upside from here, we'll possibly have a buy rating here.
All right, Prayesh, thanks a lot for your time. That's